Ladies and gentlemen, good day and welcome to Q4 and FY24 earnings conference call of Creative Newtech Ltd. This conference call may contain forward-looking statements which are based on the beliefs, opinions and expectations of the company as of this call. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. At this time, I would like to hand over the conference to Mr. Ketan Patel, Chairman and Managing Director of Creative Newtech Ltd. Thank you, and over to you, sir.
Good afternoon, everyone. Welcome to Creative Newtech Ltd. Earnings conference call for the fourth quarter and full year ended March 31st, 2024. I would like to start by thanking you all for taking time to join us today. On the call with me are Mr. Abhijit Kanvinde, our CFO, Mr. Vijay Advani, Whole-Time Director, and Adfactors, our Investor Relations team. I'm happy to say that we closed the financial year on a strong note. Creative expansion has persisted amidst the dynamic market changes supported by its efficient business framework and selectively crafted product lineup. The year gone by has been particularly eventful for us, with several of our initiatives bearing fruit. I would like to take this opportunity to quickly recap the major business updates and milestones that we have achieved during this fiscal year. To start with, overall, we grew our top line by 24.15% and profit by 77.08%, in spite of our March quarter-on-quarter being negative by around 90 crores. This is due to decline in enterprise business. As enterprise business is opportunity business and our minimum benchmark is 20% ROCE. We are also in a period of transition where we want to focus on high growth, double-digit profitable businesses. Coming to Honeywell, from a base of 80 crores odd, we grew the business by more than 100% to 170 crores. We announced the global launch of the next generation of Honeywell branded soundbars through our Hong Kong-based subsidiary Secure Connection. This launch underscores our commitment to delivering cutting-edge audio solutions to customers worldwide, and we are confident that these soundbars will revolutionize the way people experience sound. We believe this category of product has immense potential for adoption among the masses and grow into a significant revenue on its own. We also launched our new range of car air purifiers. Air purifier business is a multi-decadal growth opportunity business. It's still a newer category, so not much data is available. But we believe that the opportunity is as huge as how air conditioners opportunity was there 30 years back. Today, almost more than 1 crore AC are now sold in India. As a leading brand in air purifier category, it is our responsibility to create the market also. Besides this, we launched almost another 50 SKUs for different geographies. Honeywell is going into a robust business for us, and we expect it to contribute incrementally to our top line as well as our profit. We also expanded our brand licensing line of business with the addition of Cyber Power PC, which is a major milestone in our overall journey. Cyber Power Inc. is a US-based gaming system giant. Through this licensing agreement, we are not only gaining access to cutting-edge technology, but also aligning ourselves with a global leader in gaming innovation. This partnership allows us to tap into growing demand for high-performance gaming computers, equipment, and accessories in the India market. By tailoring our offerings to meet the unique preferences of Indian gamers, we are poised to capture a substantial share of this flourishing industry. Our aim is to set new benchmarks for gaming experiences through bespoke offerings and establish Creative as a front-runner in the Indian gaming ecosystem. In terms of geographical expansion, we have taken several initiatives to proliferate our network across overseas markets as well. Through Secure Connection, we partnered with Trigon LLC for distribution of our range of Honeywell products in United Arab Emirates. This partnership will ensure that our Honeywell products portfolio reaches customers efficiently in that region, which is a high margin area for us. Furthermore, we are thrilled to have joined hands with PT Bintang Mas Rezeki Nusantara, a leading technology product distributor in Indonesia, to enhance consumer experiences by leveraging their extensive distribution network and Honeywell's innovative product offerings, helping us to establish strong presence in the Indonesian market. Moreover, continuing on our selective strategy to add niche products in our portfolio, we signed up several new brands over the last few months, like Ruach, Pitron, Nokia, Dawa, Holoware, to name a few. There are several brands in pipeline which we have been evaluating. The momentum that we are bringing into the new fiscal year gives us an optimistic outlook for the near future in terms of both distribution as well as licensing. The rate at which Honeywell business is growing is in line with our strategy to increase our revenue share from licensing business, which is a higher margin business for us. Our successful partnership with leaders like Cyber Power Inc. and Palred Electronics underscores our ability to forge strategic alliances and capitalize on emerging market trends. Moving forward, our focus will remain on securing more such segments and expanding our presence in key growth areas with a view to deliver sustained value to all stakeholders. Coming year, we want to simplify our segmental revenue reporting as our business primarily is divided into three categories: licensing business, distribution business, and enterprise business, which is part of distribution. Now I hand it over the floor to Mr. Abhijit Kanvinde, who will take you through the financial highlights of the quarter and full years.
Thank you, sir, and good afternoon to you all. I will share the highlights of our consolidated financial performance, after which we will open the floor for questions. Our financials are reported as per Ind AS guidelines. Looking at consolidated Q4 FY24 results, the company reported total income of rupees 320.44 crores, declining 20.48% year-on-year. Relatively muted sales in enterprise business segment offset the growth in FMCG. However, we are seeing continued demand for several key brands like Samsung, Cooler Master, Honeywell, amongst others. In terms of segmental performance during the quarter, the FMCG segment accounted for 24.69% of revenue, FMCG accounted for 18.98% of revenue, and enterprise business comprised of 56.31% of revenue. The quarterly EBITDA stood at rupees 28.05 crores, and it was against rupees 11.49 crores in the previous corresponding period, an increase of 144.05% year-on-year. The EBITDA margin for this quarter stood at 8.75%, higher by 590 basis points as compared to the corresponding quarter last year. Operational efficiency and the higher contribution from Honeywell helped us improving the margin. The PAT for the quarter is 20.36 crores as compared to 6.45 crores in Q4 FY23, and year-on-year growth of 215.55%. During the quarter, we undertook a firm sale of our CCAR division for a consideration of 10 crores. The company earned a profit of rupees 9.9 crores on this transaction, which is included in the other income for this quarter. The EPS for the quarter is 15.11. Looking at the consolidated full year's results, the company's total income for FY24 stood at rupees 1740.91 crores, growing 24.15% year-on-year. This was mainly driven by healthy demand for the products like Samsung, Cooler Master, Honeywell, ViewSonic, and complemented by growth in EV sector. EBITDA for FY24 stood at rupees 69.22 crores as against 45.12 crores in the previous corresponding period, an increase of 53.42% year-on-year. EBITDA margins for this period stood at 3.98%. Better operational efficiencies coupled with high contributions from Honeywell helped improving in margins. The PAT for FY24 came in at rupees 48.25 crores as compared to rupees 27.25 crores in the FY23 year-on-year growth of, and it is a year-on-year growth of 77.08%. EPS for FY24 is rupees 32.58. The board of directors has recommended a dividend of rupees 50 paisa for equity share of face value of 10, and this is subject to approval from shareholders. This is all from our side. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepa Shah, an individual investor. Please go ahead.
Good afternoon, sir, and congratulations on good set of numbers.
Good afternoon.
I just wanted to check, sir, if we have any new tie-ups and pipeline for the coming year.
So, Mrs. Shah, usually we are always evaluating brands and products continuously around the year. And the process at least takes 3 to 4 months before you can sign a brand. So that's a whole year-round process. Currently also we are talking to a couple of brands. If the terms of trade and if the all under conditions both parties like, then we will go ahead with that.
So do we have any any specific target in mind that every year we need to add X number of brands to our portfolio?
So usually every year we get an opportunity to add 2 to 3 brands to our portfolio, and the brand selection also has a couple of our internal criteria, whether it's an experiential brand, whether it has a good amount of sale in the country where it is present, whether they will have manpower here. All that kind of criteria are there which we do. Usually our thought is, because we are in technology business and technology gets obsolete every 2 to 3 years, our thought process is that our business from new age products should be at least 30 to 35% on rotation basis. So whenever a product becomes, brand becomes 3 years old, we put it into old brand bucket. So if that brand is doing 100 rupees business, then we'll have to have a 30 rupees or a 30% business coming from a new brand. So that's what is the internal criteria we follow.
Okay. So, sir, coming to the marketing of these brands, so is that marketing done by creative in-house, and what is the percentage in terms of expenses, in terms of revenue, or is it done by the brands themselves?
So two things are there. The money is paid by the brand through us, because a lot of brands are not present in India, so they use the partner in India to pay for the marketing. That's the first point. Second, certain brands, for example, Samsung would have their own marketing and they won't require somebody like us to market that. And certain brands like Cricut, which is a experiential printer which can cut, emboss, print, write on a variety of surfaces. That kind of a brand, when it comes here, they usually have a brand strategy which they want us to execute, and our internal team executes that. Sometimes the brand has their own marketing agency and PR agency to build that up. So they do the top line execution and we do the below the line execution in terms of going to the market, road shows and other parts. That's the case. But except Honeywell, for none of the other brands, we pay anything from our pocket for marketing.
Noted, sir, noted. And just one last question with regards to CCART. So, we have sold CCART. So, what was the specific reason of that, and how much percentage of our revenue loss can we expect from that in the coming year?
Okay.
And how will it affect, basically, how is it going to affect our financials?
Okay. So, 2-3 things are there. First and foremost, we will not have any revenue loss because CCART was more of a go-to-market engine where we used to use it for people to order directly on our site. We have, before selling off CCART, we already have another software in place which can help us to take orders from customers, which can help our field team to go to the market and take orders. That's already in place. The major reason for CCART was that marketplace was a big opportunity, and a B2B marketplace definitely had a lot of traction. But the success metrics of a B2B marketplace and a success metric of a physical brand and distribution company is very different. The investors primarily in our company are who like physical business. They are really wanting good PAT, good rotation, good EBITDA. That's the case. If we have to build the CCART business, it is all about lifetime value of customer, cost of acquisition of a customer. It is about burning a lot of money to get this customer. And we were in a dilemma, but then we decided that our balance sheet can't afford burning money for a business. And we already have Honeywell and Cyber Power, both are high margin businesses, and we would not be able to devote time, nor we had the resources to scale it up. And as you know, right, any opportunity, if you don't exploit it in a particular period of time, then that opportunity will cease to exist. So we got a good offer and we said that let's do that. That's the reason. But again, reiterating, in terms of our revenue or profitability, there would be no loss in that case.
Thank you so much.
Thank you so much, Geeta-ji.
Thank you. Participants who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir?
Yes, Pritam, you're audible.
Yep. Thank you very much, sir, for this opportunity. Just first up, I just wanted to understand now this 10 crores of other income was due to this sale of CCART division. But still, I think we reported other income about 15.5 crores around. So what is the other 5 crores?
Okay, that is, I'll take this.
Pritam, Abhijit will take this question.
So normally, if you say without the total other income for this quarter was 16.29 crores. Out of that, 10 crores was CCART. So rest of it, the major items were foreign exchange gains, that was 4.5 crores. Okay, interest on FD, that was around 23 lakhs. Okay, and MEIS and duty scrip drawback, which was around 97 lakhs. So export intensive 97 lakhs, gain on foreign exchange 4.5 crores, and rest to other interest and other income.
Fair enough. So majority about 14.5 crores is due to CCART and foreign exchange gain, right?
4.5 crores, not 14.
No, so I included the CCART as well.
Yeah.
And this foreign exchange gain actually is we hedge completely. But the case is that when you import any consignment, custom levies 1% charge. So you have to calculate the dollar 1% higher. But when you remit, it is 1% lower actually.
Yeah.
So that's why due to statutory, we have to put it into foreign exchange gain. Actually, it's a part of cost of goods only.
Yeah, it is a part of cost of goods, but as per interest, you have to report that way. You know.
I got it. Quite understood it. And you spoke about so many brands that we have tie up recently in terms of agreements, and many more we are looking at. So how do we see the growth if I have to look at next 2 to 3 years?
Okay. So currently what has happened is after the Make in India initiative by our government, a lot of Indian brands are coming up, right? So for example, there's a brand called HoloWare. It's a commercial PCs which compete with the likes of HP, Dell and Lenovo. It's a product which is made in India. 54% of the PC components are now made in India. Now, these are technology companies who have this opportunity, and they are looking at somebody who has all India reach, who can help them scale, take to the market. So one is that kind of brands are coming to us for that. So, for example, 2 companies, Palre, which was a predominantly online company, now wants to enter offline, and they approached us, and HoloWare, that does too. Now, looking at some brands like, say, Cricut, Ruark, world over, our demographics is in India's flavor, right? 75% of our population is millennials. The China Plus One strategy, so the deglobalization, right? That's also in our favor. So all these brands really want to enter India, and most of these brands are premium and are looking at giving a great experience to consumers, because the millennials, they value life experiences more than anything else, right? And this kind of brands then kind of want to enter India. These are all new age brands, always connected devices to the internet, and they help today's consumer to either consume content or create content or share content and be a part of that community. So that kind of brands opportunity is coming.
Correct. Fair enough. But so given this new opportunities, so what sort of growth we are looking at for us over next 2 years, maybe some CAGR growth?
So, Mr. Poddar, there are mainly we have 2 businesses. One is the market entry business, getting brands to India, and second is our licensing business, which is Honeywell business. And we see that there's a huge opportunity that that's our aspiration, that every year we can easily grow by at least 25-30%. And our aspiration is that every year we at least for the next 4 or 5 years kind of increase our PAT by 40-50%. That's the aspiration.
Next 4-5 years, top line by about 25-30% and bottom line by about 40-50%, right?
Yeah.
Okay. That's very clear. And just one last thing, what's the margin differential in licensing versus distribution? I presume licensing would have much higher margin, right?
Yes. So licensing, usually the gross margin is close to 35-36%. And in the distribution space, it varies from 7 to 10%, depending upon the mix of the products that point of time which sells. That's the case. But both business cannot live without each other, because distribution business really amortizes the cost, increases our visibility, gets our foot in door, and also helps us to see the market trend. That's the case. So on the back of distribution business, if you can build a good licensing business, it's a great opportunity. So we had Honeywell till now. Now we have also the Cyber Power PC. It's a US #1 esports gaming PC brand, which is come here, and they sell online, and they sell through Amazon, and they sell through Best Buy, and similar channels are available here, and we have just tied up with them and that business. So that will be our second brand in licensing. So that's the aspiration, that once Honeywell grows to the threshold of say 270-280 crores, then we would have one more licensing brand. That's the aspiration.
Correct. And what would be our revenue mix in licensing versus distribution right now?
Currently it is, so we did 1750, right? 1750.
Yeah.
And 180 divided by 7050. Roughly still licensing close to 11-12% of our business. Aspiration is slowly take the licensing business to close to 25-30% in the next 2 to 3 years.
Next 2 to 3 years, and that will what will drive your PAT, right? I mean,
yes.
Top line growth is 25-30%. Your margin has to increase. Yeah.
Correct. And we are quite confident on that, because now we have a grip on launching products, and air purifier category, we are seeing a good amount of traction there. In the home audio segment, especially the sound bars, also we are seeing a good traction. And now we also have partners in remaining countries. The licensing business is not just for India, it is for 38 countries. So now already we are present in some other countries also. So we are already in Middle East, we are already in Indonesia, we are already in Singapore. So that also is going to help us to grow the business overall.
Fair enough. I think that's it from my side. I think thank you so much for such detailed answers, and all the very best to you. Thank you.
Thank you so much, Mr. Bodhar.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Thank you. The next question is from the line of Jyoti Singh from Orient Capital. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to confirm that top line we have guided 20-25% growth, and bottom line we are expecting 40-45% growth.
Yeah, that's our
estimation. It's not a guidance.
It's an estimation.
Yeah, estimation. Sorry. And so just wanted to understand this new brand that supported by the government, made in India.
Yeah.
So how big is this opportunity we are thinking going ahead in next 3 to 4 years?
So government also, after Make in India, has its own buying portal called GEM, Government E-Marketplace, right? last year, a business of total 3 lakh crore happened on that platform. And electronics also is a key part of that space. Now, on that platform, you can't have products listed which are from where your borders touch. You can't have any products from neighboring nations where your borders touch. So that's a great opportunity for Indian brands to really grow in that segment. And because of the PLI also, a lot of brands will grow. So the opportunity is huge. It depends upon how our manufacturers and brands really scale up.
Okay, thank you, sir. And sir, on this other segment that we have, Honeywell is our biggest client. So any other in the pipeline or in active discussion we are expecting?
So currently we had Honeywell, now we have Cyber Power. So currently these are the two only which are there on the plate in the licensing space.
Okay, so any other big brand that we are expecting or in active discussion, sir?
No, in the licensing space, no. In the distribution space, yes, but in the licensing space, no. So you ask something like Honeywell. Honeywell is our licensed brand. So nothing on the licensing space currently.
Okay, thank you so much.
Thank you. The next question is from the line of Pooja Thakkar from Seven Island PMS. Please go ahead.
Good afternoon, sir.
Good afternoon, Pooja.
Thank you so much for the opportunity. Sir, I have one question. Creative has recently signed a brand licensing agreement with Cyber Power Inc. for gaming computers. So what kinds of opportunity with respect to this gaming computer you foresee in India?
Yes. So, as I mentioned previously, right, India's millennial population is 75% of our population is less than 35 years of age. And they prefer a lot of online interaction. They prefer a lot of, they play also a lot of games where there's a large community playing the game, right? And they play with games with people whom they don't know also. The company we tied up has almost 33% market share. Along with them, there's another company called iBuyPower. So they together have given the license for India. Both put together, they have a 66% market share. And US, both put together, do almost a business of $1 billion. Coming to data, IDC says that the gaming overall is growing at a space of 23-24%, the esports gaming. And esports gaming is also now a part of Asian Games also. So it's a huge opportunity. Second, we have the first mover advantage today. If anybody wants to buy a gaming PC, there's no one website which will come to your mind, right? And the websites which are there also, they don't have their configurators where you could configure your PC right from scratch. They don't have frames calculator because that's very important aspect for a game. Plus, you also require partnerships to come from NVIDIA, Intel, Microsoft, AMD. So with our partner, all these partnerships also come on a platter. Plus, they are our tech partners, so they've been in this business for 25 years. So how to build a great website, how to sell on a website, all that also they bring to the platter. What we bring to them is the on-ground logistics, the know-how of the Indian market, and we have picked up the best team from the industry who have been in that business. And I think we will be by 22nd of this month, the website will also go live. So by the next quarter, we'll be able to tell you that how we are tracking on that.
Oh, great. Thank you so much, sir.
Thank you so much, Pooja. Thank you so much.
Thank you. The next question is from the line of Rohan Patel from Turtle Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, Mr. Rohan, you're audible. What's your company's name? Turtle Capital, right?
Yes, yes.
Yeah.
Yeah. How big is Honeywell opportunity for us at this moment? Like, it's a big brand. It is a mass brand. So can we expect that Honeywell can be a 500 crore business for us in 5 to 6 years?
Yes, definitely. That's our expectation that the Honeywell business should become a 500 crore business in the next 2 to 3 years. And I will tell you why. Because if you see overall, in the categories we are, right? In the Honeywell space, we are in the air purifier category. Air purifier almost is a large opportunity. I said in my opening remarks that it is like how air conditioners were there 30 years ago, right? Last year, 1 crore air conditioners just sold in India. So it's a multi-decadal opportunity in air purifier, and if air purifier does well also, it could be close to that. Second category is Honeywell passive business. So Honeywell passive is our networking cables business. And if you see my Indian counterparts also, they would do around 800, 900 crores. Just one brand is doing 8 to 900 crores in that passive business, right? Plus we have audio. Audio is again 2 to 3 billion, means a 25,000 crore opportunity for that. In the audio space, Honeywell brand resonance is not so great, but I'm sure that the opportunity is so huge that we can really make some dent with the Honeywell space. So looking at all this, if we get great products and if we get the right skill set, we can do very well. Plus, we just don't have India as an opportunity. We have another 38 countries also as an opportunity. So yes, that's why we aspire that we should do 500 crores in Honeywell.
Okay. And talking about cyber power, so have you started the manufacturing of cyber power PCs?
Yes. So I'll just say we will not be manufacturing, we'll be assembling the PCs. So basically it is that you go on a website, you decide what's your budget, what kind of a PC you want to buy, and then you start picking up products, a cabinet, a power supply, a motherboard, a cooler, a hard drive or memory, the type of monitor, the type of keyboard, the type of mouse, all that. And it also keeps telling you what will be the performance of that PC. And then once you order it, your custom-made PC is then assembled in a small factory, and then it is shipped to you directly. And plus you get a 3-year warranty, 5-year warranty, you get on-site warranty, all that you get with that.
Okay. See, understand the India is dominated by millennials and young crowds, but still the gaming culture in India is at lesser stage. It is not that much big as it's in US or it's in China. So what steps are you taking with cyber power to increase the penetration or creating a gaming ecosystem?
So Rohan, so what is a gaming PC basically? So there's a big creators community also, right? Your first, so your consumer has 3 avatars, right? The first consumer avatar is the young millennial who want to play games, right? That's the first avatar. The second avatar is the creators community. So people who do animation, people who create, do ad films, do products, they require a high performance PC component, right? So third, your is somebody who requires to do stock trading. He requires faster desktops for HFT trading. Somebody in mining of crypto, right? So all this requires high performance computer components. Gaming is the fastest and it has the best computer components. Today, with the boom of AI, right, all these machines, because it has an NVIDIA graphics card, all these machines can go to build a large LLM network. So that also is a part of that. So gaming, as you see, the core component in the creators community, the core component in crypto or frequency trading or everywhere else would remain the same. So it's a very huge opportunity in that space. Second, we already have the ecosystem because we do a brand called Razer, which is an Apple of gaming. We do a brand called Cooler Master. It's also a big brand for us. So we really are very gung-ho. And we have seen in Cooler Master also, so many of our power supplies are not bought by gamers, but are bought by server companies. So many power supplies goes into people who are making their own servers for data centers and other stuff. So there's a huge opportunity in that space.
Okay, so the end consumer is very diverse in cyber power PC. Yeah. And another question is, how much will cyber power PC will add into your top line in next 3-4 years? Like it will take some time to create a market. So
correct. So our when we went on the drawing board, our aspiration was to do in 5 years close to $80 to $100 million in that space. But we are still learning, and right, India is a very different market from elsewhere.
Absolutely.
So I'll be able to better answer you in a couple of quarters' time. Second, it's part of our subsidiary, and I don't run that business. There is a gentleman, Vishal Parekh, who runs that business. So over a period of time, he will be able to give a better idea. And let us launch this 22nd May, and then we'll see how it goes.
Okay. And just one last question. So as of FY24, how much is contribution of Honeywell?
This is 24 this year, which 24, 25.
23,
25%. Current year is 12%. So 180 crores in 170 crores in a total business of 1600 crores. Console we are talking about.
1713 crores.
Yeah. So around 1700 crores, 170, 10%.
10%.
Okay. And how much it was in FY23? Just absolute number.
Was we were doing last 23 we did 1375 crores, and in 1375 crores it was 80 crores.
80 crores.
So it was almost 5%. 6%. 5.8, 5.9.
Okay, thank you. That's what's on my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Akash Jain from GT Financial Services. Please go ahead. Mr. Akash, your line has been unmuted. Please go ahead with your question. As there is no response from the line of current participants, our next question is from the line of Aniket Redekar, an individual investor. Please go ahead. Mr. Aniket, your line has been unmuted. Please go ahead with your question.
Hello.
Yes, sir.
Yeah. Thank you for the opportunity. So, sir, I have a few questions. Hello. Am I audible?
Yes. Yeah, Mr. Aniket, you are very audible.
Yeah. So I just want to understand that is there any new market or the region that the company is targeting for expansion?
Currently, no. Currently, because we have 38 countries, we want to first console and establish that and go further for Honeywell. So out of 38 countries, still we have reached 12 countries. Actually, 12, 13 countries. So we want to build that and go further.
Okay. And how do you plan to increase that? in the existing market?
So usually first you take manpower in that country. So currently in Middle East, we have the Middle East sales director, we have GCC sales director, we have the passive components sales guy, plus we have marketing team there. So then this team, once we have that in place, then we'll get distributors in place. Check whether all certifications to launch product in that country is there, and then take it further. So for Middle East, all our certifications are in place, all our manpower in place. Similarly for Singapore. So Singapore is a smaller market but if you want to go to Southeast Asia, it's a very strategic market. So Singapore, we have Christina, who is our Director of Southeast Asia. Under her leadership, we opened up Indonesia, Thailand. Now this Malaysia is opened up, Singapore is opened up. So that's the plan. Then we also seeing that countries which have a higher population, we want to go there. But then Egypt and Turkey and South Africa, these countries then really pop up. Saudi Arabia pops up. We have a person in Saudi Arabia also. But Egypt and Turkey, there's a huge problem in terms of exchange. So if we get the right partner who is ready to pay cash, pick up the material on their own risk, then we will go there. Egypt, Amazon, we just started. We picked up order with Egypt, Amazon also. And for building a consumer brand nowadays, first you have to build the brand online, right? You require number of reviews, you require number of glance views, then the brand gets built. So we have spent a lot of time on Amazon. Currently, if you see most of our products, air purifier is more than 3,000 reviews. Surf suppressor, more than 3,000 reviews. Audio, we are building that space. Once that review starts following in, then you will have good traction in the coming time. So as we get the right skill set in terms of manpower, and if we get our certification is almost done, but in certain spaces it is that though you have the certification done, you have to transfer that certification on the distributor. So as we get the right distributors, we will go ahead.
Okay, got it. And sir, are we leveraging any technology to stay competitive in terms of cost cutting?
Currently, so whatever we can do in our space, like having the right ERP software, having the right system and processes, having the right website builders, having the right sales management tools, all that is in space. AI as of now only like how a KG student uses, so to generate your content for your social media, to generate your content for dealer postings, all that our marketing team does that. But are we doing anything on the cusp of cutting edge technology in terms of our system processes and cost cutting? Currently, no.
Okay, got it. And sir, one last question. What is your outlook for the next quarter and the next full fiscal year? Are there any specific milestone or targets you aim to achieve?
So as I answered in my previous question also, every year we want to grow our top line by 25 to 30% and bottom line the same, around 40 to 50%. So that's what is kind of we are looking at.
Okay. Got it. Thank you, sir. Thank you so much.
Thank you.
Yeah. Thank you. The next question is from the line of Jyoti Singh from Arihant Capital. Please go ahead.
Thank you for the opportunity. Sir, my question is on the margin side. What are the expectations going forward?
I'll ask Abhijit to take that question.
So overall margins in distribution business is, as Ketan mentioned, is in the range of 8 to 10%, and overall margin in this, I'm talking about gross margins, and overall margins in Honeywell business is in the range of 34 to 38%. Enterprise business also gives us a margin in the range of 1.5 to 2%. That has been the gross margin. So always this is a blend of these three businesses. As you are aware, as and when we will increase contribution of Honeywell business, then our margin structure would improve. Today, we are at a PAT margin at console level of 2.36. I am removing the extraordinary tax after tax profit of CCAT. So we are at 2.36 almost. We should, going forward in coming years, if our aspiration is to grow Honeywell, and if that happens, then we are working very hard towards that. If that happens, then within 2-3 years, the PAT margins will look in the range of 4.5 to 5.56%. That's going to be our endeavor.
Okay, thank you, sir. Yeah. So just wanted to understand this 1.5 to 2% for which segment?
That's the enterprise business segment. So usually, my business, it would be futile to look at the gross profit margin basis. We have an internal about ROCE. So we usually look at any business which gives us
today
20%.
ROCE is at around 23% for the company. So can we continue?
Yeah. So if anything is which can give us a ROCE about 20% is a good business.
So these are guidance on the gross margin side, not on the EBITDA margin side.
No.
What are expectation on the EBITDA margin side, sir? I think 7 to 8% that we are estimating.
Today, yes. We would like to move from 4.5-5 to almost 8%. That's 8 to 9%. That's the that's the endeavor and the aspiration. Yeah.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Manoj. I am individual investor. Please go ahead.
Hello. Am I audible?
Yes, Manoj, you are audible.
Yeah. Hi, sir. First of all, congratulations on a wonderful set of numbers. So just wanted to ask that if we exclude the other income from the sale of the C card, our profit margin would be lower. So what levels of EBITDA margin can be considered sustainable?
So clearly, Manoj, as I said, okay, we have at a console level, we have reported a PAT margin of 2.82. If you remove and an EBITDA margin of 4, if you remove post-tax effect of the profit which is generated from the C card, your margin as a percentage, console margin as a percentage goes to 2.36. Okay. So, and EBITDA would not fall so drastically. So it will be around 3.6, 3.7. So my point there is, with this, we are aspiring to go take this EBITDA to almost 7-8%, 8% or more, and PAT from 2.36 today level to 4.5-5%. Yeah, this is has been the aspiration. So what you have to remove is 7.71 crores from the EBITDA and PAT. Yeah, so you will get the figure.
All right, fair enough. Sir, just my last question was about basically the motive behind the share swap agreement to increase our stake in the Secure Connection Limited. If you could answer that, that would be great.
Yeah. So in secure connection, we had an early investor in that space, and when we used to do a console, obviously the minority share would go out, right? And it was not adding any value to him, plus it was not a tangible holding for him. That was the case.
Basically, in a closely held company or a privately limited company, or what happens is, if it is not listed, then exit to be given for a shareholder is very difficult. You will appreciate, right? So this person saw an opportunity, and he got, I think, 2.5 times his investment overall in 4.5 years. He saw an opportunity. Please appreciate our entire Honeywell business, okay, which is profitable business, is there in our subsidiary, Secure Connection Limited, Hong Kong. Yeah. So any improvement in the holding by creating Newtech Limited will flow more money to the consolidation and ultimately to the shareholders. Do you agree?
Yeah, certainly.
What we have done is we've taken our investment in phases. We have done it in 3 tranches. It has been 2 tranches. It was a Herculean task to convince investors, existing investors, and we did it in 2 tranches. So from 52.5, we took it to 77.5.
Okay.
I think. So now there are only 2 shareholders. One is Creative Newtech Limited and one is Mohit Anand.
Okay.
Yeah.
Yeah. Yeah. All right, sir. That's what I wanted to know.
Thank you.
Thank you.
Thank you. The next follow-up question is from the line of Akash Jain from GT Financial Services. Please go ahead.
Hi, am I audible?
Yes, Akash, you are.
Thank you for the opportunity, sir. Sir, even though our other income increased because of sale of C-card, but our overall total income for the quarter fell by around 28%. So, what was the reason for the same?
You are talking about the top line?
Yes, sir. I mean the total income, right?
When you say income, is the turnover or the profit?
Total income has 2. Sir, total income has 2 components. One is the sales, revenue from operations, and another is other income.
Yes, sir.
Yeah. So the growth in revenue, okay, has been I'm talking consolidated numbers. Growth in revenue from operation has been from 1376 crores to 1713 crores. All right. The other income obviously has grown from 9.49 crores to 20.28 crores. If you knock off almost 10 crores of that, okay, then your other income becomes 9.49 here, and it is 10 point something, 10.28 almost. Yeah. What has fallen in the other income from operation, if you care to look at, is the export incentive, income from export incentive. Last year, the income from export incentive was 16 crores 53 lakhs. This year, it is 7.5 lakhs. Sorry, 7.5 crores. I beg your pardon. 16.53 crores to 7.5 crores. Why has it fallen? Okay, in spite of increase in our turnover of enterprise business and exports. The reason being that there is a change in the incentive calculation structure. It is now ad valorem, and earlier it was calculated on a per piece basis. So if I export something, I used to get a per piece export incentive. So in ad honorarium, the rates are lower, and therefore the calculation of incentive has gone down for us. So have I answered your question?
Yes, sir. So, and what led to a significant drop in the revenues for EB?
Okay.
So EB is a very opportunistic business. If we don't make a ROCE of 20%, then we will not do that business because capital is limited and we want to put that capital on high margin business. In the month of JFM, overall traction on the EV business was lower and we could not make that ROCE, so we did not go for that business. That's the only case. And overall, because that business is between 1.5 to 2% gross margin, we only do it when it's an opportunity business.
Okay. And sir, my last question is that it seems that Petron, right? Petron seems like a high volume and low margin brand.
Correct.
So, I mean, what impact will there be on our revenue and margins?
So committed margin with Petron, we have already double digit. It's between 10 and 12%. It's an online only brand. They want to get into the channel. And they are an Indian company, so the supply chain overall is much shorter. So we think in Petron, our ROCE will be close to 32-33%. So it's a good business to be in if we can do higher volume. Say we in Petron for the first year, if we can do 30 crores and the next year 100 crores, it's a good business to be in.
Absolutely. Absolutely. Okay. I will just start at Petron. So it takes time to settle down, but this is our aspiration.
Okay, thank you. That would be all from my side.
Thank you so much.
Thank you, sir.
Thank you. Ladies and gentlemen, we'll take this as a last question, and I've handed the conference over to Mr. Ketan Patel, Chairman and Managing Director of Creative Newtech Ltd, for closing comments.
Thank you everyone once again for your participation in our Q4 and FY24 earnings call. In case of any further queries, you may get in touch with Adfactors PR or feel free to get in touch with us. We look forward to interacting with you in the next quarter. Thank you so much.
Thank you very much.
Thank you.
Thank you. On behalf of Creative Newtech Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you so much. Thank you.